Good morning, good afternoon, good evening, wherever you are in the world. My name is Greg Michalowski from ForexLive.com. This is Morning Forex Technical Report, morning in the U.S. That is where I take a look at the technicals that are driving the markets in some of the major currency pairs. So let's get started. I'll start by taking a look at the euro versus US dollar. If we look at this pair and what has been happening over the last week or so of trading, you can put a red box around the ups and downs that have occurred. Lots of ups and down volatility here in between those. The extremes from the red box are the 100 and 200 hour moving averages. Those are our rudders, our barometers for bullish above, bearish below. And on the downside, we have support against this old level right here. This used to be a ceiling through here, and then it became a, then we had this volatility right here, and then moved to the upside, and then it became a floor through here where we found support buyers against it. So on the downside, we have the 107.60 to 107.75 level as our key level on the downside to ultimately either break below at some point. We're not going to stay in this range forever. That's what we know, but we first need to get below the 100 and 200 hour moving average. But as you can see in trading here today, what have we done? We found support buyers against the 100 hour moving average here early in the early U.S. session. Got a little bit below it, but we could say that we found buyers against that at 108.15. We're currently trading at 108.25 up here, so we're trying to find support buyers against the 100, keeping the price in the upper end of this range, keeping a more bullish bias. On the top side, we do have lots of swing levels that the market has been using as resistance over the last week or so of trading. On Wednesday, admittedly, the price did move above that upper end of the swing area right here, moved above by about 12 pips, and then said, we're going back down. And what do? We reestablish resistance on the next hourly bar within this yellow area, and then force its way back to the downside where we found support against the 200-hour moving average. In trading yesterday, the sellers had an opportunity to take the price below the 200-hour moving average, but what did they do? They failed like they failed up here, and the market started to rotate back to the upside. And as I said, in trading here today, what are we seeing? We're seeing support buyers come near the 100-hour moving average, keeping the bias more in the upward direction right here. So buyers leaning against this level. If the price is able to stay above that level, their hope is to move back toward our ceiling here, maybe even get above it. Who knows? But the risk here is a move below the 100-hour moving average and a move below the 200-hour moving average on the downside. That's the risk right through here, and as long as the price can remain above that level, they have the opportunity for the price to move higher and go test that old ceiling again in the euro versus US dollar. Let's take a look at the dollar versus yen. This has an interesting fundamental story because Bank of Japan's Kuroda spoke today. I think it was at Davos, but they recall on Wednesday the Bank of Japan came in, and what did they do? They kept rates and the upper band for the 10-year yield at 0.5%. And everyone thought, oh, what are they doing? But the first reaction was a sharp move to the downside in the yen, a sharp move to the upside in the dollar versus yen. And we saw the price move all the way up above the 100 and 200-hour moving averages. And then we see the market saying, no, they must be kidding, or they're going to tighten policy going forward. And what do we see? The price move all the way to the downside. Well, what happened today in Kuroda's speech was that he said that he wasn't kidding, that the 10-year high band was going to stay at 0.5%, and they're going to keep extreme monetary policy, expansionary monetary policy going. And so what did that do? That kick-started the dollar versus yen back to the upside here. We held support against the 100-hour moving average, which was a technical clue. Kuroda hadn't spoken at that point, but we found support buyers against that level. And then after he started to speak, we saw the price move back above the 200-hour moving average. That's a green line in this chart. And getting above that level was more bullish, and we're seeing the price move higher above the 38.2% retracement of the move down from this swing high right here to the swing low that we saw right through here. So that level, the 38.2% retracement and the 200-hour moving average, is now going to be support levels for the dollar versus yen. Stay above is more bullish, move below is more bearish. Now let's take a look at the sterling versus US dollar, and what do we see on the daily chart? If we look at this high right here, we saw the high price this week come up and test the high price that we saw in December, and we found sellers against that level. So we know that this level right here near the 124.45 level is going to be a key resistance level for the sterling versus US dollar. We also have this swing area on the daily chart and 50% retracement, all coming in between the 122.76 and 122.43 level, and that's where the last 2 trading days have seen low prices come in. Let's remember the 123.00 level. I think I can remember that. That's a nice round number when we go to the hourly chart, but that is the 50% midpoint of the move down, going all the way back to this point right here, which is in 2021. So the 2021 high is the to the low that we saw here in September. The 50% retracement comes in at 123 even. Let's go to the hourly chart here, and we'll remember the 123 level. Yeah, we can remember it because why? Because it's the 38.2% retracement and also the 100-hour moving average. So 50% on the daily chart, 38.2% retracement on the hourly chart, 100-hour moving average on the hourly chart, all comes in at the 123 level, this level right here. And so that is going to be a key level going forward for this currency pair. As we see, the price is staying on the upper end of that range. In trading yesterday, we came down, sort of sniffed the 1.23 level, but found support buyers and pushed the price back to the upside. Today we are seeing a move to the downside. I'm not sure where this swing area comes from, but I believe it is back in the past that we're going to have to watch to get through on the downside. You can see we're trying to hold support against it somewhere around the 123.40 level. If we move below that level, then look toward the 123 level, but key support at 123 could keep the buyers leaning against that level going forward. Finally, let's take a look at the dollar versus Canada. And this pair is interesting in a couple reasons. One, because yesterday we came up, actually this week, what did we do? We came up and tested the 100-day moving average on this day right here. That was Wednesday, and then moved above it in trading yesterday and found sellers against that level. If we take a look at the hourly chart, this is what it looks like in trading yesterday. So the buyers had their shot. And what did they also run into? They ran into some resistance against this swing area through here, where we had a number of different swing lows, and then it became swing highs through here, and then broke above it here, and then broke back below it. So you can see the swing area portion of this here, where the market then came up and retested that area after breaking through the 100-day moving average. The price moved down, and we're moving down to another swing area through here, where again it was a ceiling through here, and then broke above it, failed. It came up, used it as a ceiling again, and stayed in this bottom range through here until we broke to the upside in trading here this week, and we came down and retested this area. The buyers need to come in against this level in order to keep out of this red box, and they did. And we're seeing the rotation back to the upside. So we have the 100-day move average above and the swing area below that we're going to deal with the dollar versus Canada. Also, the 100-hour moving average is moving up toward that swing area, adding to the importance of that level from a technical perspective. So there you have it, folks. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye now.